Money doesn't disappear by accident. It leaks quietly through habits you never question. No one warns you because everyone is trapped too. And the system profits from your silence. Lifestyle creep. Lifestyle creep is when your spending rises to perfectly match every raise you get. You make more money, but somehow you're still broke at the end of every month. It happens everywhere. Promotions, bonuses, new jobs. The income goes up and quietly, invisibly, so does everything else. At first, it feels like reward. You worked hard, you earned more, so you deserve better. Maybe it starts small. A nicer apartment, a faster internet plan, eating out twice a week instead of once. Each upgrade feels justified, reasonable, like you're finally living the life you were supposed to. Your brain tells you this is progress. You're moving up. Then the raise hits your account and within weeks, it vanishes. Rent is higher now. The car payment is bigger because you traded up. Subscriptions you forgot about pull 20 here, 15 there. The grocery bill doubled because you buy the good stuff now. None of it feels wasteful. It all feels normal. But here's what actually happened. Your lifestyle expanded to consume every extra dollar. You're not saving more. You're not investing more. You're just spending more to feel the same. The gap between what you earn and what you keep stays exactly the same or shrinks. The trap isn't the spending. It's believing that more income equals more freedom. But freedom only exists in the gap between earning and spending. Lifestyle creep closes that gap completely. You make more and more, but you never actually get ahead. You just get comfortable being broke at a higher salary. The car payment treadmill. The car payment treadmill is when you trade in your car every few years to get a lower monthly payment. But you never actually own anything. You're always paying, always owing, always stuck in a cycle. It starts at the dealership. Your current car works fine, but the salesman shows you something newer. This is how comfort becomes a cage. Not through failure, but through reward. You feel richer while staying stuck. That illusion keeps the machine running. Better gas mileage, nicer interior, safer features. Then comes the pitch. We can get you out of your old payment and into this for less per month. It sounds perfect. Lower payment, better car, you sign. Here's what actually happens. Your old loan gets rolled into the new one. You still owe money on a car you no longer have, and now you owe even more on the new one. The payment drops because they stretched the loan from 5 years to 7. You repaying less each month, but paying for longer, and the total cost explodes. 3 years later, you do it again. Another trade, another lower payment, another longer loan. Each time you restart the clock. Each time you owe more than the car is worth. That gap between what you owe and what it's worth is called being upside down, and you're drowning in it. The cycle never ends because you never let it. You keep chasing lower payments instead of ownership. Meanwhile, someone who bought once and kept it has been driving for free for years. You think you're upgrading. Really, you're just renting with extra steps and worse terms. The minimum payment illusion. The minimum payment illusion is when credit cards let you pay tiny amounts each month while interest silently multiplies your debt for decades. You think you're managing it. You're actually feeding it. Every month, the statement arrives. You owe $3,000, but the minimum payment is only $60. That feels manageable, affordable, safe. So you pay the $60 and move on with your life. The card company smiles. Here's what's happening behind the screen. Most of that $60 goes straight to interest, not your actual debt. Maybe $10 touches the balance you owe. The rest vanishes into the bank's pocket. Next month, interest builds on the full amount again. Your balance barely moves. Debt doesn't need force anymore. It just needs patience and paperwork. You agree slowly, month by month. At this rate, that $3,000 debt will take over 12 years to pay off. You'll end up paying nearly $6,000 total, double. And that's only if you never use the card again, which most people do. The trap works because $60 feels harmless. Your brain sees a number you can afford and stops thinking about the math underneath. Meanwhile, compound interest runs quietly in the background, growing your debt while you sleep. Credit card companies design minimum payments specifically to keep you paying forever. They're not helping you manage debt. They're helping themselves to your future income, one small payment at a time. You think minimum means enough. It actually means endless. House poor is when you buy the maximum house the bank approves, then spend every dollar you earn just keeping it. You own the address, but the address owns you. The bank runs the numbers and says you qualify for $400,000. That sounds like permission, like proof you can afford it. So you buy at the top of your budget, maybe even stretch a little higher. The mortgage fits fairly, and you convince yourself the rest will work out. Then, reality arrives. The mortgage eats half your income. Property taxes come due. Homeowner's insurance is more than you expected. The air conditioner dies in July. The roof needs repair. The lawn needs care. Every month brings another bill you didn't budget for because the bank only calculated the mortgage, not the life that comes with it. You can't go out anymore. Vacations disappear, savings stop. One broken appliance becomes a crisis because there's no room left in the budget. You're working just to keep the lights on in a house that's supposed to represent success. The bank approved you for the maximum you could pay, not the maximum you should pay. They'd profit from the biggest loan possible. You're the one who has to live inside that decision for 30 years. You wanted a home. Ownership sounds expensive for a reason. Because freedom never comes with low payments. Renting your future feels easier today, until today repeats forever. What you got was a beautiful financial prison. The walls are nice, but you can't leave, can't breathe, can't build a life beyond maintaining the structure. That's not ownership, that's expense. The whole life insurance scam. Whole life insurance is when you pay massive premiums for coverage that's supposed to build cash value like an investment, but really just enriches salespeople while your money sits trapped and growing slowly. The pitch sounds perfect. You get life insurance that never expires. Plus, it builds savings you can borrow against. 2 products in one. The agent calls it forced savings. Smart planning. A way to protect your family and build wealth. You sign up thinking you've made a responsible adult decision. Here's what happens to your money. A huge chunk of every payment goes to commissions and fees. The agent gets paid first handsomely. What's left gets divided between the actual insurance cost and a cash value account that grows at maybe 2 or 3% per year, sometimes less. Meanwhile, you could have bought term life insurance for 1/10 of the price and invested the difference in a basic index fund, earning 8 to 10% annually. Over 20 years, that difference becomes hundreds of thousands of dollars. Your whole life policy builds maybe $30,000 in cash value. The math is brutal. Worse, if you try to access that cash value, you have to borrow against your own money and pay interest. If you die, the insurance company keeps the video benefit. You've been feeding an account you'll never fully access. Whole life insurance isn't protection. It's a wealth transfer from you to the insurance company, disguised as financial planning. Paying for convenience is how small daily shortcuts drain thousands from your account every year without you noticing. Delivery fees, subscription services, premium upgrades. Because confused people don't rebel. Each one costs almost nothing. Together, they cost everything. It starts innocently. You're tired after work, so you order dinner instead of cooking. $7 delivery fee, $4 service charge, plus tip. $15 extra just to avoid the stove. Once a week becomes twice, then 3 times. That's over $2,000 a year on fees alone. Then come the subscriptions, streaming services you barely watch, apps with premium features you never use, cloud storage for files you forgot about, gym memberships for equipment gathering dust. Each one is only $10 or $15 a month. Totally reasonable, except you have 12 of them running silently in the background. Add express shipping because waiting 3 days feels impossible. Upgrade your phone plan for unlimited data you don't need. Buy pre-cut vegetables because chopping takes time. Pay for parking close to the entrance. Every single choice trades money for minor comfort. The math is staggering. $5 here, $12 there. By year's end, these invisible conveniences have pulled $4 to $6,000 from your income. Money that could have cleared debt, built savings, or funded something that actually mattered. Convenience isn't the enemy, but convenience as default bleeds you dry. Each small choice feels harmless because harm hides in repetition. You're not buying comfort, you're renting it forever at compound cost. Keeping up appearances is financing a middle-class image through debt to prove success to people who don't actually care about you. New clothes for events, fancy dinners to impress friends, vacations you can afford posted online. All of it borrowed against the future you're destroying. It starts with comparison. Your coworker bought a new watch. Your neighbor remodeled their kitchen. Your friend's Instagram shows another trip to Europe. Suddenly, your life feels smaller, less impressive. You need to catch up to show you're doing just as well, so you spend Convenience is sold as self-care, but it quietly taxes your future. Every shortcut skips discipline. The credit card comes out. Designer handbag to signal taste. Dinner at the expensive restaurant so people see you there. A vacation package financed over 12 months because everyone else is traveling. Each purchase isn't for you. It's for the audience, real or imagined, that you think is keeping score. Here's the truth. Nobody admits they're not watching. They're too busy financing their own appearance to notice yours. That co-worker with the watch is drowning in payments. The neighbor reorganized their house. Your friend's Europe trip maxed out 3 cards. Everyone's faking it, assuming everyone else is real. Meanwhile, the debt piles up. You're paying interest on experiences you didn't enjoy and items you didn't need. All to impress people who forgot about it the next day. You think you're building status. Really, you're buying approval from strangers using money you'll spend decades paying back. The appearance of success costs actual success and nobody's even looking. The emergency-free delusion. The emergency-free delusion is living paycheck to paycheck while assuming nothing will ever break, get sick, or go wrong. No savings buffer, no backup plan, just blind faith that life will stay perfectly smooth forever. Every dollar gets assigned before it arrives. Rent, groceries, bills, subscriptions, debt payments. The budget balances perfectly as long as nothing unexpected happens, and you convince yourself nothing will. The car will keep running. Your health will hold. The water heater will last. Everything will be fine. Then reality hits. The transmission fails. Your tooth cracks and needs a crown. The laptop dies right before a work deadline. The dog needs emergency surgery. Suddenly, you need $800, then $1,500, then $3,000. Money you don't have because you never built a cushion, so the credit card comes out. What should have been an inconvenience becomes debt with interest. Comparison is the most profitable addiction. It never tells you the full story. Everyone is performing success. One emergency turns into years of payments. And because you're still living paycheck to paycheck, the next emergency does the same thing. The cycle compounds. Financial experts say keep 3 to 6 months of expenses saved. Most people have less than $400. That gap between should and reality is where disaster lives. The delusion isn't that emergencies might happen. It's believing you're the exception. That your car is different, that your luck will hold. That somehow, unlike everyone else, your life will stay predictable and smooth. Emergencies aren't rare, they're guaranteed. Living without savings doesn't mean you're optimistic. It means you're one breakdown away from financial collapse. Retail therapy addiction is using shopping as emotional regulation, creating debt to solve problems that spending created in the first place. You feel bad, so you buy something. It works for an hour. Then the guilt and debt make you feel worse, so you buy again. It starts as reward. Bad day at work, treat yourself. Stressful week, you deserve new shoes. Relationship tension, a little shopping helps you cope. The purchase delivers a hit of dopamine. For a moment, you feel better, accomplished, in control. But the feeling fades fast. The dopamine drains, and you're left with the same problems plus a charge on your card. Except now there's also guilt, shame, and anxiety. So your brain, desperate for relief, suggests the same solution. Buy something else. The cycle repeats. Each purchase digs the hole deeper. The credit card balance climbs. The closet fills with things you don't need and barely use. You're spending money you don't have to feel better. The debt itself becomes the source of stress you're shopping to escape. Retailers know this pattern. Sales and flash deals trigger urgency. Emergencies aren't bad luck, they're math catching up. And peace becomes impossible. Buy now, feel better now, worry later. But later always comes. Shopping isn't solving your problems. It's becoming the problem while disguising itself as the cure. You think you're treating yourself. Really, you're medicating with merchandise and paying interest on temporary relief. The bill arrives long after the dopamine is gone. The retirement delay. The retirement delay is postponing retirement savings for when you make more money, watching compound interest slip away forever. You tell yourself you'll start next year after the raise when things settle down. Meanwhile, the most powerful years for building wealth vanish silently. Compound interest works through time, not effort. $1 invested at 25 grows exponentially more than $1 invested at 40. Put away $200 a month starting at 25, and by 65 you have over $500,000 assuming average returns. Start at 40 with the same amount and you'll barely break 200,000. Same effort, vastly different outcome. But when you're 25, retirement feels imaginary. Bills feel real. Student loans, rent, car payments. You convince yourself there's no room in the budget. You'll catch up later when you're earning more. Except later, there are kids, mortgages, bigger expenses. The budget never opens up. The delay becomes permanent. Every year you weigh cost, you compound growth you can never recover. Waiting from 25 to 35 means losing 30 years of growth. The math is merciless. Retirement accounts aren't for old you. They're for young you's money to grow while you sleep. Starting small beats starting later every single time. 200 a month at 25 destroys 500 a month at 40. You think you're waiting for the right time. There is no right time. There's only compounding time. More income won't fix broken patterns. More work won't cure bad structure. Money problems are about behavior. Brand loyalty tax is paying premium prices for names and logos that signal status. You're not buying better quality. You're buying the feeling of being associated with the brand. Walk into any store and the pattern repeats. Name brand cereal costs $6. Store brand costs $3. Designer jeans run $150. Nearly identical denim without the label costs $30. Premium cleaning products charge double. The difference isn't performance. Blind tests prove people can't tell store brand from name brand. The active ingredients and medications are legally identical. You're paying for the label. The thread count in store brand towels matches the expensive ones. What you're paying for is marketing, packaging, and the logo. Companies spend billions making you believe their version is special, superior, worth the extra cost. They hire celebrities, create emotional ads, build an identity around their products. You start thinking the brand says something about you that choosing it means you have taste, standards, success. But the premium you pay doesn't go into quality. It goes into advertising to convince the next person to overpay. You're funding the machine that manipulates you, then paying extra for the privilege. Generic works the same. It just doesn't make you feel special. And that feeling, that tiny hit of status costs you tens of thousands over a lifetime. You're not loyal to quality. You're loyal to a story someone sold you about yourself. The side hustle trap is working second jobs to fund a lifestyle instead of fixing spending. Trading your time for temporary relief while the real problem grows untouched. You tell yourself this is temporary. Just until things stabilize. Just until you catch up. But temporary solutions have a way of becoming permanent habits. And before you notice, your entire life is built around survival, not progress. You're exhausted, burned out, and still broke because you're treating the symptom instead of the disease. It starts when the budget stops working. There's too much month at the end of the money, so instead of cutting expenses, you decide to earn more. Drive for a rideshare app, freelance on weekends, sell things online, deliver food at night. The money helps briefly, but here's what actually happens. The side income covers the overspending, so you never address why you're overspending. The lifestyle that required extra work stays exactly the same. Worse, the extra money often inflates your spending further. You're working 60 hours a week, so you deserve takeout. You're tired, so you pay for convenience. The side hustle income vanishes into the same holes as your main income. Meanwhile, you're exhausted. No time for family, no energy for health. Sleep suffers. Stress climbs. You're grinding yourself down to maintain a spending level that shouldn't exist in the first place. The side work becomes permanent because the spending never shrinks. Cutting $500 in expenses gives you $500 every month forever. Earning an extra $500 requires constant work, ongoing effort, sacrificed time. One solves the problem, the other just powers through it. Side hustles aren't bad, but using them to avoid fixing you spending is like running on a treadmill to outrun your shadow. You can hustle forever and still never get ahead. Real freedom doesn't come from working more. It comes from needing less. Until spending is controlled, income will always feel tight. And the race only ends when you choose to step off the treadmill.